plugs the other way around, so sorry for that. So the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. So I do thank you for your attention on that. And I welcome you once again to this live trading room hosted by Admiral Markets and presented by myself. My name is Chris. And today we're going to take a look at swing trading. Tomorrow we'll take a look at all trading, and Thursday is intraday trading. And for those of you who might be wondering, how do I register? Because I did notice that I expected a bit more people to look at the intraday trading on Thursday. So just in case you're not aware how to register, you just go to admiralmarkets.com, go to education, click on webinars, and then you can register here not only for the live intraday trading on Thursday, but also for our educational webinar, for example, risk management. All right, so that's, you just sign up here at the live webinars, just in case. Alrighty, let's go back. We'll be taking a look at breakout strategies especially, and to define the breakout to define the breakouts, we're going to be taking a look at the trend, divergence, Fibonacci levels, and support and resistance to determine our directional bias of trading. And then when we have that, we'll be looking for pullbacks as an opportunity to trade, candlestick formations or break of trend lines to trade that. All right. Let's take a quick look at the Forex calendar. Before I do that, let me see if our colleague Michai is here today. Michai, are you there?
Yes, hello, good morning everybody. Thank you very much for passing me the microphone, Chris.
Good morning.
Good morning, good morning. I hope you're doing well this week. I will now change the presenter to myself and will show you my screen. Just give me one little second and then we'll continue with our first part of the webinar. Today I wanted to speak to you about a very interesting topic. I wanted to speak to you and tell you a little story. Those of you who are familiar with me know that I like to take little detours before we talk about complicated stuff and tell something a little inspirational, something for you to put everything into a correct context. Once again, my name is Michael Onahov, and I'm a client relationship manager at Admiral Markets. If you wish to email me, you can do so on this email. You can always phone me on this telephone number, also find me on Skype. You can always Google my name as well. You'll get a link to LinkedIn. I highly suggest you add as a connection. No one knows what it might turn out to be. Okay, so let's start with a little story. I wanted to ask you a question if any of you know who J.P. Masser and Bill Kaplan are. Those two people created a company called Strategic Investments in 1992. Despite its name, this company did not deal with investments per se. What it did, it recruited MIT majors and taught them how to play blackjack. Some of you have probably seen a movie called 21. It's not historically accurate, but the idea is correct. MIT students are taught a mathematical strategy and are able to win big in the casino. All of that also involves romance, betrayal, and a bulky security guard who takes you to the back room, which you will leave with no money and a broken nose. The strategy mentioned in the movie is very simplistic. In real life, it's a lot more complex. You can see Kevin Spacey writing something down here. I'm pretty sure he's breaking down just a very simple part of the mathematical algorithm that we're using. But and the recruitment process was very difficult as well. It involved choosing one great student out of hundreds. The chosen one were great at making decisions under pressure and were bloody good in counting and analyzing. But the idea remains correct. Using advanced math skills, MIT students were able to make profits playing blackjack over long periods of time. As you all know, blackjack is a casino game, and therefore the house always has an edge. In 8-deck blackjack, the age is 0.85%. Best MIT minds, advanced mathematical strategy, hours and hours of training, ability to act calm under stress, all of that allowed the MIT blackjack team to receive an extra 2% edge in their favor. Now, if there is one similarity between Forex and blackjack, it is this. Both Forex and blackjack are zero-sum games. For someone to win, someone has to lose. Needless to say, people with an edge won, and the ones that did not have an edge, well, they lost. Right now, all of you who are listening to this webinar are working towards your edge. Those webinars are long and the presenters talk about complex concepts, but you still decided to spend your time here. And you did not learn something, and you would develop yourself even further whilst learning and listening to this webinar. Right now you must think of yourself as those MIT students. You are working on your skills, and if you carry on long enough, you will be better in analyzing and making tough decisions on the spot. Right now you're working on your edge. Every hour you spend learning, listening to webinars, reading books, and training on your demo account, all of that adds to your edge. How big your edge will be is entirely up to you. Just remember, if hard work and dedication are allowed to make profit in a casino game, just try to imagine what can be achieved in the Forex market with decent education and perseverance. Thank you very much for your attention. It's been Mikhail Onokhov. I will now pass the microphone over to Chris, and he will carry on with the live session. Thank you very much for listening. Have a good day.
Thank you so much, Mikhail. That was great stuff there. Indeed, the edge in trading is sometimes similar, and small things could toss that balance in your favor or against us. So it's very good to pay attention to details as well, because those could give us the edge at the end of the month, for example. Absolutely true. So if we look at the calendar today, we had an interest rate on the Aussie that has sent the Aussie to the upside so far, with a pretty good movement. Stayed the same. Not surprisingly though, with I believe elections in Australia in the upcoming weekend. So no decrease there. We have USD manufacturing later today, but more importantly tomorrow we have CAD interest rate, and Thursday we have Euro and Pound interest rate, and Friday we have NFP. So it's a heavy first week, that's for sure. First week within the month is always, well, it's a bit more difficult than the rest of the weeks. That's always in Forex, the first and last of everything at any time frame is always a tad more risky. So especially if you consider that the most important, biggest economies are having interest rate decisions, that, well, that makes everything a bit more difficult, right? Anyhow, with that said, let's move on to take a look at what we can expect today. Let me zoom all the way back here to the euro. And the euro is breaking the 132 support, the thick green line we have had here, indicating the daily support, in fact. And obviously we already broke that uptrend channel, the light blue uptrend channel. And so the euro definitely now in a bearish mode on the daily and 4-hour time frame. And if we zoom back to the day chart here, you can see that in that regard, if we have that support broken, we're back in the range, in fact, between 134.50 and the 128 level. So there could be that potential move back to around 129, 128, 127, 127.40. In that zone here is the bottom of the range. So we could have that fall, and we could stay in this range. Okay. If we look at the monthly chart, you can see that we had a very small bearish candle last month. It was only 270 pips. That's very small, because if you realize that sometimes the day candle is 270, right? Then the euro really didn't move at all last month in August. So the euro had a very slow summer month there. Now we already broke last month's low, I believe, indicating that bearishness continuing so far in the first 1.5 days, or even less, in September. Last week we had engulfing twins. So day chart is in a range. So this is a range trade on the day chart, but on the 4-hour chart or 1-hour chart, you can even say it's a downtrend, right? Now this has moved already quite a lot, but maybe there's still some pips here remaining. So I would say it's not worth a swing trade at the moment. Maybe if you look at the 4-hour chart or day chart, it could be a swing trade if you take an entry here, but you know, the reward to risk isn't that great either, as you can see. All right, that would be the reward. This would be the risk. It's not fantastic. It's a 1-to-1. So maybe if we dive into lower time frames, we can get a better ratio. All right. Let's see. 1-hour chart. Moving along still. This is just one move down so far. This is more of an intraday trade. If I would be looking at this, I wouldn't go intraday trade here. I would say there's maybe some small continuation to the downside here left, but afterwards it will make a bit of a retracement at least. So for me, from a swing trade perspective, I would rather wait for a bigger hook back or retracement, because if you look at, for example, this dark blue channel, you can see that there could be some space left maybe to the downside, but eventually we'll make a hook back, and that would be a better swing trade for better R2R from a better price with a smaller stop loss and a bigger target. All right, so that's why. I mean, this could go still 80 pips, I'm not saying, but eventually it's going to give a hook back. So for a swing trade, intra-week swing trade, I would rather wait for that. But for an intraday, that could be possible. We can take a quick look if you want. This is supposed to be intra-week, but let's take a look. Okay, Marilla indicator will probably be very useful. You can see that the L4 short breakout is actually just where the currency stopped at 131.65, and the target of that is 131.45. So it is a bit of a small space. The euro has had small spaces because it just hasn't moved that much. The pound is a bit more volatile, so the spaces between the L4 and the L5 Carilla indicator there, pivot point indicator, would be larger typically on the pound we've seen so far the last week or two than the euro. All right, so but if you're looking for a trade on the euro, then I think that would make the most sense. All right, break below here in this space right in here for a small short. Okay, so for those of you who are looking still to trade at intraday, there's my quick advice, or how I would look at it. Let's take a look at others now. 1 second. The ones that I found were interesting were the New Zealand, Euro CAD, dollar yen, pound yen, maybe the Euro CAD or the Euro odd, the odd New Zealand, Euro New Zealand. So I had others on my list, to be honest. Yeah, the pound yen had a massive upside. So I think that the likelihood of some continuation is high. This too, I wouldn't say is necessarily a big swing trade. It's more of a trade maybe for a day, I guess. But still, because of the massive move, the likelihood is so high that I find it interesting. The odd dollar, someone is asking, is less interesting to me. Just because it's, I mean, they bounced off the 886 fib here, but it's not a significant structural change yet, in my opinion. It's still in a downtrend. It's still in this downtrend channel, indicated by the blue lines here. Price is just retracing at the moment, and as most of you know, I'm not that interested in trading retracements. It's still making lower lows and lower highs. Maybe only recently we made a higher low. It's not enough for me really to trade it to the upside. Unless you're thinking about downside, that could be possible, but then I would still wait for a break personally of support here on the lower time frame. So I'm not sure which side you were looking to trade, but that's why I'm not interested in either side, because it's, first of all, it's a downtrend here, so, but price is moving up. So that's a mismatch there. And waiting for either the trend to turn to the upside or price to fall in line again with the trend. So that's my quick 2 cents on the odd dollar, okay? Let's take a look at the pound yen, because it was quite a massive move. Let's see, it opened here. The low of this week was 152.40. And just recently it hit 155. So it's like 260 pips. It's really a lot. And if we look at the 15-minute world here, it's like a 1, 2, 3, 4, and I think we have at least a fifth wave. If you look at the oscillator 2, it's just very strong with this move up. And we have very strong movements on the oscillator. The likelihood of a break of the top is just so high statistically that those are very interesting to trade because of that. So the question is how? Let's take a look a bit more intensely. 154, 155 was a huge resistance, right? We have a red line there indicating many tops. We just had a small top outside of that. Otherwise, price was below that. It could have been an ascending wedge because we did have a lower line, connecting the bottoms. You can see that price didn't move to the upside there. Couldn't move that much down either. Right? Every time the price moved down, buyers did step in. In the meantime, it could be in a trend channel indicated by this blue line. This is the 4-hour chart, pound yen. So most recently, we did have a very impulsive move. That's the one we were looking at, the 15-minute world. This too could be a 5-wave. So if we put a fib on that move up, we can see where that target would be. We hit or just missed the 618 by a few pips. So the target of that is 156.55, and the minus 618 is at 159. So let's see where those targets relate to the daily top, because that still could be a resistance spot. So the 272 lines up with the daily top. Okay. And the minus 618 would be breaking that. Now you could put a lot of targets on this chart. In fact, probably you could easily put a target here on this weekly move, on this daily move, but those are really too big, I think, for us to really, at the moment, care about. We'll care about them when we break this top. Okay. For the moment, I'll just stick to this because the target is the top and the 272. Anyhow, I'll just clutter the chart with too many fibs. So let's go to the 1-hour chart. Now, I was hoping for a retrace back to the 236 fib, because if you fib this 1-hour move, we didn't even hit the 236 fib. Usually, this is the shallowest fib, in fact, which would already indicate a lot of power. But we didn't hit that. So far, it doesn't look like we're going to go there. So that was my trade plan, in fact, to wait for a bounce off the 236 fib. If we don't get a bounce off that, then it will have to be a breakout of the top, for example, and a hook back, and try to get it back at the breakout level for a move up to the 272. Now, as Tarantula said, you can be trigger happy, as how he always phrases it, and take the break itself, aim for that, and put the stop loss there. Okay, that's you just have a bit less confirmation for that. I'll just wait to see how it breaks and have a bit more waiting mode on this. It hasn't broken yet. We're just right at the 155 level. So we're at a talking spot. So let's see. I mean, preferably I would like the 236 fib. But if we do get a good breakout and we get a bull flag like this, then we're probably not going to make that retracement, and we're just continuing to the target. So those are my ideas on the pound yen. You can see that minus 618 target of this smaller fib, of the 1 hour fib, is lining up with this 272 right here. Okay. So with that said, anything else I still want to mention to you? Well, I think it would be good to look at the dollar yen, because we're talking about the double top as a target, but in fact, if this, because this was a wedge, right? If you connect the bottom and if you connect the top, this was a pretty good wedge, in fact. So if this wedge is breaking to the upside, right? You can see we had a wave 1, 2. This was a very impulsive wave. We've had a correction here like that. If this is breaking to the upside, just that could be a lot of movement there. If we do put a fib, you can see 236 fib. The bigger target is all the way here at 167 even. Now that seems maybe like a tremendous amount of pips, which it is, but it is possible. All right. Pound yen moved from 118 all the way to 156, so I don't see why it cannot move an extra 1,300 if it moved 4,000 here. So, but that would really mean, that would be pretty significant, as you can see. So, who knows? Last year the yen started to move in the fall as well. Some consider September already the fall month, so that could be massive. Trend continuation on the yen. Let's take a look at the dollar yen quickly, and we'll take a look at the Swissy as well. Dollar yen, you see, yesterday had a 120 pip day, and the close was right at the high. All right, so very bullish. If there's no wick at all, that means buyers had control of the entire day up to the close of the day. No one got rid of their dollars there against the yen. So a very bullish day. It's first of all a relatively big candle, but more importantly, I think it's just the fact there's no wick at all, and of course, even more importantly, that day candle is breaking out of a weekly or daily top of the triangle, right? And if you look at the week chart quickly, all of you know that there was a massive trend, and we had a big triangle like that. So if we post a daily candle like that outside of the triangle, well, that could be the trend continuation, and the target on the yen would be, the fib target on the yen would be around 111. So here too, that could be 1,000 pips. So those are interesting, interesting things to keep an eye on. If we look at the 4-hour chart, you can see that we are maybe at the top of the channel. I mean, if you connect the bottoms and tops, price is right at that top of the channel at the moment. Now, I'm not saying that that channel cannot widen, because if price were actually to break out of that, we would, adjust that channel easily, no problem. But it does indicate that it is a potential resistance. So going long right in front of it wouldn't make sense. If we break it, that's something different. All right, that makes sense, right? We don't go long right in front of a potential trend line like that, despite the fact that we did break out of the black line, which is that weekly triangle. All right, so we have a lot of reasons to be bullish. Just need that more confirmation. If you look at the 1 hour chart, you see this trend channel. That's a nice trend channel on the 1 hour chart. So my thoughts are these. Either a pullback back to support, for example, the bottom of the trend channel, or somewhere around this zone where we broke the tops. And when we broke this triangle, for example, those can all be support levels. So that's one way of tackling it, waiting for that in the bounce. Or if we do break to the upside, right, if we do break this high, the same as the yen basically. Right, wait for a break, and we'll take the pullback continuation trade. So we can use these concepts of break, the BPC on the pound yen and the dollar yen. So those are the two methods, just like the pound yen, in fact. The two things that you could be looking for that make sense, I think. Selling it here, no, doesn't make sense because we just broke out of a daily triangle. That doesn't merit an entry, in my opinion. Okay. Nor does it going long here because, just as I already said, we're right at the top of the trend channel. Good. So I'll take that visual away. You can see, by the way, the weekly oscillator is back to the zero line. So that could indicate that that correction is finished. And you can see it on the day chart as well. It's just the oscillator here is just bouncing in between here. Well, I do prepare it in advance. Noshratala. It's just that I'm showing you all the time frames. So if some of you find the switching of the time frames too confusing, because I want to show you the perspectives that I see, because that's what I've prepared, and I want to show you that. But yeah, I can imagine maybe that if too many time frames could be too confusing. Does anyone else have that as well? If that you're lost in which time frame we're looking at? Would it help, Nashratala, if I tell you which time frame it is? Or if we go more slowly from top to bottom instead of switching, for example, weekly, daily, 4 hour, 1 hour, instead of like hopping, maybe I hop too much back and forth. Well, let me know, okay? So we'll talk. We'll see. We can find an ideal balance there. That's good for everyone. Let's see. So that's what I'm looking for on the dollar yen and pound yen. All right. By the way, the one more thing I wanted to add, the monthly chart on the dollar yen. So this is monthly. It had a doji, as you can see, with wicks at the top and bottom, so not much direction here. Last month's high is at around 100. So 100 is anyhow a psychological number, something to be aware of. Okay. That's something that I wanted to add. Next one. Someone mentioned dollar Swissy. We can take a look at that too. Why not? Well, we can do it right now. Why not? There it is. Well, the dollar index is in fact, remember last week we were looking at the dollar index and it looked like it was at support. So this is the daily chart, okay? And we already identified that the green trend line could be a support line. The light green was a daily support level or weekly support level even. And it had some struggle, but it did show inverted head and shoulders as well, right? Potentially, of which the trend channel top was the neckline. So is that clear to everyone here? We talked about it last week. And we broke that. We broke the highs. We're making higher highs and higher lows. So within the larger time frame, this has been somewhat of a wedge slash maybe with the slant to the upside if you look at the long-term perspective. So there is that capability for the dollar index, one would say, to move to the upside at least back to 85-ish, 84.50. So there's a lot of space there, potentially. Will it move in one shot like it did here on the left? That remains to be seen. It could go up a bit like this to retrace and then move up to finish that move. That's something we have to watch out for, but as always. But you can see that the dollar index, in a way, confirming that the dollar is being bought. And we can see that against the yen yesterday. So let's take a look at the Swissy now. So let me use a top-down approach. I'm still waiting, Nosratal, for your feedback, but this is the weekly chart, and you can see that we're in this triangle in a way. I can even extend this line. So obviously, if you look at this weekly chart, this is more of a range-bound environment, right? Compared to all the trending that the Swissy has done before that. The Swissy really isn't moving that much. But it did have a big impulse here. So, and wave analysts sometimes indicate that we should make a continuation to the upside just to finish this three-wave up. If you will put a fib on this first up move, we actually took out the target. So the next target could be maybe the 107. Or if we were to fib the entire move up, that's still 107. It's actually the same. Now, when could this, or I can leave the fib on in fact, when could this, Swissy start moving? It really depends because, once it's in a range, it could stay in a range for a long time. And usually there's not all currencies will be trending at the same time. If the yen is trending, the Swissy will probably range bound, because if all currencies would be trending, it would be too confusing. The whole market would be on super doses energy. There's always typically one currency that's moving and the others are not moving that much, and all its crosses are moving. So in February, it was the pound. In October, November, December, January, it was the yen. February, the pound moved a lot. In April, May, the Aussie moved a lot. Okay, so that's typically what you see. Swissy definitely not moving that much. So within this, let's move on to the day chart. Within this range, which we can see by these black lines indicating the tops and bottoms being connected, we see that the oscillator is really not giving us much value because it's just following those tops and bottoms, first of all. So we won't read that much information out of that. We have I drew here a dark red line indicating the top, kind of a local intermediate range top, which could still provide some resistance. That's a daily top, so we're close to that. And you can see the inverse head and shoulders pattern, just like the dollar index here as well. So here too we have that space back to the top of the range. Okay. Now if you took a buy in here based on that pattern, you're doing well. And I would target somewhere the top of the range. So to me, the price is moving up at the moment. And it's just close to resistance. All right, so this doesn't look like it's going down right now to me, Yapit, because price action is bullish. If you look at the 4-hour chart now, I'm looking at the 4-hour chart, and if you look at the price, it just very bullish there. Good bullish candles, closes. And if there were any bearish candles, they're small and they're going sideways. So I'll go back to the day chart. You can see it on the daily candle as well, right? So that looks like bullish price action. So let's move to the 1-hour chart to see if the only thing is it's close to resistance first of all. So the only way to trade it with divergence on the 1-hour chart, okay? We look at the 4-hour chart, divergence, not really, nothing there. Now I could crack this resistance very easily, I don't know, but that's just a practice of mine, and I think that's a good practice not to go short or long right in front of major tops, bottoms, resistance spots, etc. So what we were looking for on the dollar Swissy, well, that's two things, right? Either our break, pullback, continuation, or if we were to get to bigger pullback and a bounce. So that's, to me, very simple. I would focus now on something else because I'll be waiting for one of the two. There could be a small intraday trade here. I don't know. There's not much space though. No, there's not. There's not enough space. There's just, you see the bigger trend line is only 18 pips away. Even an intraday trade is too close. Okay, so does that make sense? Anyone have a question on anything that you've seen so far? We've talked about the dollar yen so far, pound yen, dollar Swissy, and euro dollar. Yes, so indeed, dollar Swissy looks, if I look at the 4-hour chart, if you had to choose one chart, I would use the 4-hour for trend definition. And if we had to define a trend here, then that's up indeed. On the 4-hour chart, we're making an uptrend because we're making higher highs and higher lows. And if we attempt, we don't have really a trend channel though. So it's not an uptrend channel. It is making higher highs, higher lows. The trend channel, of course, is great because then you have a confirmed trend where you have, for example, 3 hits at the bottom, or 4 or more hits, and hits at the top, and prices moving between that in an uptrend like that. That's the best. But we don't have that on the dollar Swiss because the currency just started to turn in a way. So we have higher lows, higher highs. Yes, we are in an uptrend, but we don't have uptrend channels. So, and if you look at the day chart, what is the uptrend on the 4-hour chart? In fact, on the day chart, could be either this is a range in itself, a smaller range, or we're part of the bigger range. So I'm looking at the part of the bigger range as you already noticed. But I do want to be aware of that resistance level. But in fact, I do think that this bigger range is going to play out. Does that make sense? So you have 2 ranges, in fact. That's why I have that line there. You have the green range and the blue range, right? Or blue triangle. But I'm not a range trader. For those of you who looked at the range webinar last week, Tarantula isn't either. So that's why, first of all, it's also halfway a range, halfway that blue range. But even if you were to trade the green range, this is one of those situations where I think a breakout could happen. I don't know. I wouldn't be personally trading that range, but so indeed, it's to me it looks bullish, but it's just not at the right position to trade it. Okay. To make it a quick summary there, I'll go back to the 4-hour chart. What I'll be looking for in the 4-hour chart is either a pullback or a break, pullback continuation. Okay, good. But that's good for the follow-up, because if anything is unclear, I have no problems in explaining it a bit differently so that everyone is with me and following me. So, other things on the list I had. We can take a look. Well, I have EuroCAD. Pound dollar. Maybe we can take a look at pound dollar. Pound dollar monthly didn't have a bearish. Let me make this. Start all the way from the top. We'll go from month all the way to the 1 hour. So hang on. we actually had a bullish candle with a bit of a wick. So it's a lot different than the euro. The candle was a bit bigger for sure. So the euro hardly had any movement. The pound, some movement. And the months before, we had huge wick at the top and a huge wick at the bottom. So pound has really gone sideways for 6 months now after that fall in February of 1,500 pips. So was that a break right in here? Was that a break? And is this a pullback? And are we going to get a continuation for the downside? As some traders, including me, have been thinking. But the fact that it has taken 6 months is quite long. All right, so let's move on to the week chart now. You still see the triangle that we broke right in here. But ever since, we've been making a lot of corrections. All right, that's the weekly. The weekly candles last 2 weeks were pretty bearish, in fact. If you look at those candles. Then again, we also had a pretty big wick at the end of last week. So really, the pound couldn't break that 154.30 level because there was pretty big pressure there to the upside still. So despite the break maybe of a certain rising wedge that we were looking at. I took it off, but this one. The price did move back, but if you put a trend channel on this day chart, that looks pretty neat actually. We have 4 hits on the top. And the price couldn't break the daily support, which was a top here on the left, which was a key level. We bounced off that level and we broke this trend line. So maybe we're bottom of the trend channel for more upside. If you look at the dollar index, that doesn't match up too much. And the euro is definitely bearish. So what that means, of course, is that the euro pound is moving down a lot, and it has. It has moved down a lot. So definitely pound is showing more strength than the euro here. Yesterday actually had a bullish day outside of that trend line, but it has a wick too. So there are a lot of mixed signals, and that sometimes happens. What can we do? But the bearish sentiment I had is definitely in the fridge at the moment, considering the fact that we're in the bottom of the trend channel now, and we broke out of the down corrective trend line here, the small black one here. Okay. That's it for the day chart, I guess. Oscillator is still above zero. Price is above moving averages. So maybe there's some long possible. 4-hour chart, you can see price was underneath the moving averages, now broke out of it and hooked back to them. And we had a inverse head and shoulders. Actually, that was a pattern someone in our room saw on Thursday, and that indeed happened. And we broke out of that neckline already. We broke out of it actually with a gap this week and moved away from there. That's also why, of course, the pound yen moved so much. So let's move on to the 1-hour chart. You could put a fib on this breakout because that is a swing high, swing low that broke out of that trend line. And the bottom here is 154.62. So that's a key swing high, swing low for the breakout. Let's see. Moving averages are flat. We had an impulse here a bit and an upside that didn't move too much. So it does look like a correction that can get continuation to the downside. Do you see that pattern like that? But a 618 could be a sweet bouncing spot for one more upside. Now I'm going to zoom out back to the 4-hour chart, and I'll put a fib on this entire downside. And any of these fibs could still be resistance, because we know that the dollar index has potential bullishness. So what could happen is that the upside is just running into resistance, and we turn here for more downside. So we don't want to we want to trade with the trend, but we want to do it in a sustainable, not naive way. So we want to put a fib on this downside to see what the resistance levels are. If we then back down to the 1-hour chart, we can see that 618 fib, or maybe the 786 fib, just a bit higher, which is probably equal to the minus 618. Yeah. There's not much confluence, in fact, between the retracement fib and the target fib. Often there is, which makes it very nice trading. In this case, there's not much. I can put a fib on this first up move here. So there are a lot of fibs here, Basically, I'm fibbing this move, and the down move, right? The targets line up nicely here. But if you look at the fact that the currency stopped at this minus 272 and not at the 50 fib, it looks like the currency is actually respecting the targets. You see that? Not so much the retracement fib. So if that's the case, then the target on this chart would be 156.25. Let's take a look at the 50-minute world. Okay, now I'm going to take a look at quick look at the Camarilla indicator. Let's see what it says. So it says H4 breakout above that 1 hour top. This is the 15-minute world, and we're taking a look at the pivot point Camarilla indicator. And you can see that if we break 156, that's where we have the breakout trade here for 40 pips, which has more space than the euro, as I said. And the H5 target is indeed at 156.33. That's where we have those minus 272 and minus 618 targets as well. So there's a confluence. And we see L4 short only below 155. And the target is 154.60. Now personally, I'm not looking for shorts, as you know, unless I break. Personally, I would like to see a break of back into the downside. I mean, the break of that uptrend channel. I'll show you in a second if you didn't see that. For me, this is still because we're at the bottom of an uptrend channel, and we broke out of this pink downtrend channel here above it. I'm not looking for shorts, so I would ignore the short potential here at the bottom, personally, and I would either be looking to trade this top in here, or there's an L3 long as well, as you see at 155.20. So that's more interesting for me. Let me take a look at the fib on this chart. And you can see that L3 is kind of halfway to 15 and 618 fib. So those would be my preferred zones for trading it. And I wouldn't take this one today. Maybe tomorrow will look different. We'll take a look again, but so let me go back now. You got my view on what I'll be looking for the pound. Now, is that going to happen? It could happen in our session. It's only 30 pips away. So it just needs to fall a bit or rise a bit, and those zones will be triggered. It's really not too far. But it's just halfway those zones at the moment. That's all. And the channel I was talking about, just in case you missed that, was on the 4 hour, no, what was it, the day chart, sorry. And this is the channel I'm talking about. Just ignore the fibs for the moment. I just added those for you, but here you can see that pretty neat channel there, and we broke out of that correction. And are in fact at the bottom of that channel and have broken the correction, so we could have that space like that. Okay, so that's the reason why I don't want to short. That's just a rule in my trading plan. Sorry, folks, I just don't do that. I don't go short right into the bottom of a trend channel if I'm at the bottom. Rules are rules. It's good to have rules. I think this is a good rule. So that's the reason. So let's keep an eye on this one. This definitely is a matter of a few pips before it can get triggered. It either needs a small fall down, and we'll be right. We'll be hooking back from a technical point of view. Let me zoom to the 1 hour chart. No, let me make this a bit bigger. Let me zoom in the 4 hour chart here. You can see if we make this fall, we're just actually hooking back one more time to the trend channel. That's possible. So that just needs 30 pips, and we can trade it. In the meantime, we'll keep an eye on this, but in the meantime, we can look at others. Does anyone else have something of a preference? I was thinking about the EuroCAD. I'll show you. I won't dive into too many details, but what it boils down to is if we just focus on this 4 hour chart for the moment, because there's tons of things to say on all time frames probably, but I don't want to make it too confusing. Someone thought it was too many time frames probably, or found it difficult to follow. So I'll try to focus more on one time, or like a couple maybe. But this 4 hour time frame here, you can see that this channel is nicely intact. This is a 4 hour channel. It's quite established. I mean, it's probably more of a day chart channel, in fact. And you can see the potential right in there. There is a kind of a line right in here, right? The top that was broken just in here. Somewhere in here, which would also be the bottom of the trend channel, which I find very interesting as support. And price is pretty close to that. It's only like 40 pips away, which for a swing trade would not be much. Just needs to dip it down just a bit more, and maybe we can get the bounce right at that bottom. Swing trades, of course, mind you, it's good to plan them, but sometimes it just takes time before they get triggered, right? Sometimes you have a zone in mind, but doesn't necessarily mean that zone, that the price will get there today. It could be tomorrow, all right? That's just the nature of swing trading. Nothing we can do about that. This is the 1 hour chart now. And we actually have a triangle here. We broke that triangle to the downside, so there could be some downside momentum, because we did have some downside momentum prior to the triangle, right? On the 1 hour chart, you can see the 1 hour chart was in the downtrend or trend channel to the downside. And triangle, and now we're getting continuation. But the trend on the 4 hour and day chart is still up. This is, if anything, this down move on the 1 hour chart is a pullback, which is in fact for a swing trade an opportunity. Because the pullback, it will give the opportunity to buy it lower for an up move, for a likely up move, or at least a likely bounce. And if there is weakness in the market, we will see it somewhere here before it goes down. Because everything moves in waves. So even if it is planned to go downside, at some point when there's major support, it will bounce up like the green arrow on the right there. Now for an intraday trader, this is more of a downtrend already, right? So the 1 hour world is a downtrend, so there could have been maybe some intraday trades here, but my swing trade cap is more saying, of course, that this is too close to support for me to be willing to take that intraday trade to the downside. That's what I would be thinking personally. So that's something we can keep in mind. Let's take a look if there's something else, because that still needs to fall a bit. You can take a look at the 15 if you want. I mean, it still needs some 40 pips. Really nothing to add basically than that, okay? Alrighty. Let's go see if we have some swing trade that we can execute now. Maybe the Euro New Zealand I have on the list as well. Let's take a look. This is the day chart. You can see, despite the attempt to push up this range, didn't get much follow through, did it? Did push up twice, but we got rejected twice, and now it's moved back about halfway to the range. This is the 4 hour chart. It kind of looks funky, doesn't it? Kind of weird looking. I mean, it's just one straight move, up move, and then like this. It's kind of funky. I don't know exactly. I had it on my list, but I'm trying to figure out why. Because let me take a look at the 1 hour chart. I think the reason was because the 4 hour world made a ABC correction maybe back to maybe this is a 50 fib, but I don't know. I wouldn't start using fibs here about halfway to range, so I canceled my previous thought. Give me 1 second. I lost my fib because it's white. There it is. Yeah, but I don't think it's good. It's definitely more of a range environment than anything. So this could be support maybe. I'm not too enthusiastic about it, but if you look at it, probably what I was looking for was the fact that we're at support and we could bounce back to the upside. Support, if we look at the 15-minute world now, 15. Probably looking for a break above this resistance, local resistance, smaller time frame resistance for upside. But I have some reservations now about it. That's probably what I was looking at, because at support, if we break that support, we can make the upside. I don't know now. I would move on to something else. Let's take a look at Let's see, New Zealand is on my list as well. Let me take a look at that. New Zealand is in this uptrend channel. This is the 1 hour chart. It's an uptrend channel here. Had a chart pattern, break of that chart pattern, but it was a very passive break. But we're moving up again. So I'll go to the 4 hour chart now quickly. Yeah, so we still have definitely some space here to the top of that uptrend channel. We're actually breaking as we speak. So we'll go back to this one in 9 minutes, okay? Because this one is breaking. The other one is either waiting for a pullback or we're waiting for a break. So we can see how this 1 hour candle closes above this resistance level, okay? This hourly candle isn't finished yet, although it does look bullish. Now, if it does close above it, I'll probably plan for a pullback for an entry, maybe upon the break of this, the same level as the broken top in here, for upside. I had New Zealand dollar as well. This is the 1 hour chart. Let me zoom out to the 4 hour chart first. And yeah, the reason why I like this one was because if we do break this intermediate, let me make it a different color. If we do break this, let's make it red. If we do break this red line, then if you look back at the day chart, you can see why that would be interesting, because maybe we have this upspace back to the top of the range. Now that also wouldn't correspond too much with the dollar index, but then again, the dollar index, as we know, doesn't have to move up directly in one shot. Plus, there could be major weakness in the euro and not so much in New Zealand against the dollar, and the euro would have more influence and impact on that dollar index anyhow. So that would be the idea, in fact, right? That green circle up to the top of the range. It did bounce off the bottom of the range, as you said, as you know. We're looking at that as well. Will it break? Will it not? It didn't break. There's a daily top right in there, though. But to me, I think that if it breaks above the lower red line and hooks back, that would be already uptrend. And we would have space to the top of that range. Now we're not an uptrend. If anything, we're just stuck in this range there. So maybe not the best of trades, but it was something that just caught my eye, that we're at the bottom of a range, basically. And I was, not that I want to range trade, but if we do have a trend on the 4 hour chart, then I wouldn't mind trading it, even though it's a daily range. But that was the thinking. So I was just trying to analyze how we can tackle and approach that setup the best. So that's why I said, okay, if we break maybe this top on the 4 hour chart, that could be the indication that we're making higher highs. So either I wouldn't be trigger happy, as Donatello says, and take the break here. Probably better to wait to see how it breaks and wait for the hook back and continuation. So that might not happen for a while, though. So let's move on. Not so urgent setup anyhow then. We can monitor it for the rest of the week, though, right? See how that develops. Let's take a look at the euro odd. see, Euro odd is maybe back at the bottom of this trend channel. We had some overthrows and underthrows, right? Here, an overthrow, here, an underthrow. That's okay. That can happen with the trend channel. And we're right at the bottom. So here too could be a bouncing spot, I was thinking, within that uptrend. This is the 1 hour chart. So it's similar to the Euro New Zealand idea in a way, but the difference is that the Euro odd has that daily / 4 hour uptrend channel, while the Euro New Zealand is just like halfway the range. So the Euro odd therefore could be better. Let's take a look at the 15. There is a bit of divergence maybe between these bottoms here. Just a bit. Let's take a look at the 15-minute world. Recently, quite a powerful move though down. If you look at that, really a break of these tops. Let me quickly look at the 4 hour chart, okay? Yeah. Break of probably these resistance. This resistance zone will be needed for any longs, because otherwise any move up could still encounter local or short-term pressure for the downside continuation. So anything above 147 would be a confirmation of potential upside. Otherwise, there could be a lot of smaller downside continuation. Maybe, the charts could always do something like this, for example, a falling wedge. So you don't want to get caught at the top of a falling wedge, for example. Those are possibilities. So that's why we want even short-term 1 hour resistance like that, preferably to be broken as an indication that, and now I'll move back to the 4 hour chart, that we actually are indeed bouncing, right? Because besides that, this is just a line that I've drawn. I don't have any confirmation if that's indeed important or not. Once we break above 147, then the likelihood of that, this being indeed a bounce and a touch of a trend channel bounce, and we do move up like this, maybe at least back to the top here, is significantly higher than right now. So in this case, I would wait for a confirmation. You got 3 ways of taking trades. In fact, you can take an entry. You can pick a level and just see how it goes. For example, you can do that with double top or with this trend channel. This is a level that might be important and might work. That's one way of approaching it. You can wait for confirmation, which would be some price action signal or a break of this red line. Or you can wait for momentum. For example, you could wait for a break, a bull flag, and only take it when you really see the momentum come in the market upon the break of this bull flag. That's a momentum entry. So picking a level is a bit more risky sometimes, but you do get the best price if it works out, but it is riskier. Well, if you wait for confirmation or momentum, you already have price turning, and it's more confirmed. A level, if you just pick a level, it's a bit like trying to catch a falling knife. Sometimes it works good, sometimes not so good. So it's more difficult. Let me, if it's okay with you, I'm kind of curious how the euro and pound have done in the last hour. So let's take a look. Or let me use the other viewing mode for a second. The pound. hasn't done much the last hour, but did post a bullish 1 hour candle 2 hours in a row now. So maybe we will not get the bigger pullback. That's something that always can happen. Although price is moving very slow to the upside, that it does continue like that. And then this downside was all the pullback. That was the pullback. That's it. Upside continuation. Sometimes happens. I mean, this looks pretty neat. Doesn't have to happen though, right? So if it doesn't, then this would be the zone to look for the upside. If it does, then this would be the zone to look for the upside. Right? Still the same story. It's just that we had 2 bullish hours in a row, so maybe the correction is not going to happen. That's all. Maybe. We are getting at an H3 short though. I mean, I don't want to trade that, as you know, but maybe that would be more difficult to break than we wouldn't get there. So let's keep an eye on that. Nothing really happened anyhow. Euro, let me zoom to the 15-minute world. 15. Wow, I had a nasty break. Very small space. Yikes. Nasty break of this low, but then no continuation to the L5. There was only 20 pips anyhow. It was a very small area, and it couldn't reach it. So that's nasty. Nothing really else to say, because if it can't even move 20 pips, then there's not much power to the downside there. 20 pips is not a lot, folks. So that is a bit weird. Let me take a look at the 1 hour chart. And in fact, you can see why, because if you look at the 1 hour chart, we had a bullish 1 hour candle. So we did break the 132 support, but not moving that much this morning. As I said, any swing trades we didn't want to take here, because eventually retracement is in the cards. If not here, then definitely a bit lower. So, and looking at the 1 hour chart, maybe that's right here, but that's still too early to tell. Let's take a look at the AUD New Zealand. Not bad, a bit of a wick, as you can see. Let me take a look at the 4 hour chart. That's still going on. When does this 4 hour candle close? 1 second. Hmm. Take a look at the 5-minute world. got a 618 bounce, so the target for the moment is 272, and later on the minus 618. I'm thinking about maybe an entry around 115.40-ish or 115.45. Um, it would have to be, it's more of actually an intraday trade, because the target is the 272, so anything here would have to be with a risk like this to get a bit of a 2-to-1 at least. Otherwise, a swing trade could be maybe here, but the stop loss would have to be all the way here on the 1 hour chart, as you can see, because that's the last fractal. So that's a pretty big risk, in fact. So would it make sense to target the 272, of course, with that? We could target the 618. Even that is not a great R2R at the moment. So I'm trying to see if we get either a bear bull flag like this, that would make sense, because then we can use this as a stop loss and this as the target. That would make a great R2R. Or if you use the 4 hour chart and take that 4 hour fractal break as an entry with the stop loss here, but then not target the smaller 618, but in fact this bigger 618. This minus 272, not this one. See, then you get a better reward to risk. Sorry. Something like that. So the 4 hour could work, the 4 hour, but it is a bit of a big stop loss, so I'm not sure. It's not that bad, but it's not the smallest, maybe 70. The 1 hour world wouldn't make sense, because the 1 hour world targets are a bit lower. So the 4 hour world makes more sense. Anyhow, it's about the same stop loss size as the 1 hour world, because the difference is only, here's the 1 hour stop loss, and the second one, the blue line there, is the 4 hour stop loss, right? Because that's the next support level, the 4 hour and the 1 hour world. So the difference is really small. So that's why the 1 hour world really, if you think about it, doesn't make as much sense if the stop loss in the 4 hour world is just around the corner. You see what I mean? That's what I was thinking so long, because it could make sense as maybe as a intraday trade or a big, just that one time frame higher, because this one is really doesn't have that R2R, I would say. Right? That's one of the most important things I always look at, right? Because that's our key measurement for profitability as well at the long run. Adrian is asking if it's a disadvantage that it's in the middle of the channel. No, I wouldn't say so necessarily, because if it's a good channel, there's still space to the upside. One thing you might want to look at, though, is that if it's like at a quarter of the channel, then you might want to be careful indeed, because now there's still space for the currency to move to the top of the channel at least. If the price is, if you put it in quarters like this, if you quarter it up this channel, and price is at the top, in the uptrend at the top of the quarter, then you might indeed, I would agree, then you could better avoid it. In fact, would be nothing wrong with avoiding it. Could be actually good advice, indeed. Probably the best advice, in fact. So Although we're close to the quarter, we're still more closer to the midline, so it would be still okay for me. But good comment there, Adrian. Thanks for that. Anyhow, we were getting close to the end, but I'm still haven't identified anything that I like right now. So I do apologize for that. But sometimes what can you do? Let me visually quickly look through them, see if something changed. Euro, it's getting some. Well, as I said, it's nothing for swing trading right now. The pound would be a good swing trade if we retrace deeper, or if we took this 50-50 maybe here, but that has passed. So the only thing that remains is either waiting for a deeper retracement for a swing trade or an intraday trade somewhere up in here. Unless, if you look at the day chart, unless you really want to trade the channel and wait for the break to the upside. Let me think here. Pound Swissy. We didn't look at the pound Swissy. It's right at the top, so I'll be not doing anything there. Just like the dollar Swissy. The Euro CAD, waiting for the bottom. I already said that. The yen. Let's take a look what's happening here. Dollar yen. Still right at it. Nothing changed. You know what I'm looking for, either break, pullback, continuation, or a deeper retracement. Not even that deep, in fact, just a retracement, but okay. Aussie, either waiting for the downtrend to continue, or we're totally switching gears, which has still a long road ahead of it. The New Zealand, I thought maybe to trade at the bottom of the range to the upside, as you know, not happening right now. What would happen with the pound yen? I forgot about that one, in fact. Pound yen. Pound yen had a bullish hourly close above the tops here. That looks pretty good. I think that, let me see what the level is. We're pushing it through the 155. We'll go to the 50-minute world now. Back to the 1-hour world. I would still wait for this hour. Let's see. This 4-hour candle just started. The low of it is 154.70. So one thing we could do is Wait for this 4-hour candle to finish. See if it closes above the high. If it does, plan an entry at 155 with the stop loss. Maybe, let's see, below 154. Let's see. We could even use the candle as a low. Maybe let me zoom into the 4-hour candle here. Because you see all these 4-hour candles are retracing each other. Oh, except this very impulsive part. But because of the fact that this was already quite impulsive, I wouldn't mind waiting for a retrace of this 4-hour candle, for example. Somewhere around halfway, just like this one here. With the stop loss maybe below this 4 hours low, which is 154.70. So that's something I'm thinking of. Yeah, that's probably the best, I would say. It's always tricky because this is the breakout. So, other way to do it is, as Adrian says, Adrian thinks it's maybe a bit less, or is asking if it's less likely to retrace. In some cases, yes. If it's a breakout that, for example, will probably have a high probability of an impulse. For example, the dollar CAD. Let me show you. When it broke out here, I didn't expect much of a retrace, and indeed it moved up. So that's because it was right at it was a very long consolidation period, right at the bottom of the channel. So that's where I expected it indeed. This pound yen, not sure, because we already had the impulse here. So usually after the impulse you get more of a slow retracement up move. So that's typical. I mean, I wouldn't never know with the yen because it could be very trendy. So we did break the high. I mean, there's no doubt about that. If you like to trade, it could be a breakout trade right now. Upon the break of this fractal, in fact, with the stop loss below this 1 hour, right? Like that. The target would be 272 or minus 618. 272 is a bit more likely at the moment. That's 155.78. Upon the top of the break of the top is 155. I don't know. That was like it's 1.221. So not a really great R2R there. So that's why if I wanted to use the 4-hour world, I thought if we get a 30 pip stop loss here, I was thinking in the retrace of the 4-hour candle plus the 155, what was it, 80 as the target, then we got a 2.7 to 1. Plus we already saw this candle break above it, so that increases the likelihood of the trade materializing in our way because it's a sustainable break. So those things were like better, I thought. 2.7 to 1 instead of 1 to 1 or 1.2 to 1. Plus we can wait for this 4-hour to finish, wait for the trace, and catch the continuation instead of the break. So this would be the break, this would be the pullback, in fact, and then hopefully we'll get the continuation. So it depends how you want to trade it as well. If you like the break here, you could, I mean, it's still possible to put entry order there, and it's only 12 pips away. It will make a dip and maybe push up again, then push down again to retrace our 4-hour candle, and then move up again. That's that's always possible. Depends how much you like to trade. I think I'd rather wait for more confirmation. But so let me see if there's anything else. Well, you know that you're odd. I'm waiting for that. And that's about it. New Zealand. All right, New Zealand I already explained. That's about it. So nothing there, folks. Let me see if the intraday something on the pound or euro still happened within the last 20 minutes. Pound is fighting at the H3 at the moment, and the euro hasn't broken that L3 level. It did break the L4 and went up, but it hasn't broken the 131.77. So let's see if it gets some follow through here or not. We're really not doing much, as you can see. Well, that wraps it up. I was hoping to catch a trade today, but regarding the intraday, I'm still looking more for things to set up how I wanted to set up. Be careful of the CAD tomorrow. We'll talk about that, and the euro pound on Thursday, right? Because of the interest rate days. I typically avoid currencies on the day of the interest rate, personally. So just because it has adverse effects, and it's worth avoiding those, I think. So looking forward to tomorrow. We'll take a look at intraday trading as well, besides the swing trading, and Thursday at intraday trading. And if you want to register, just do that by going to Education Webinars, and then you can sign up on the blue button. Thanks for being here, and looking forward to seeing you tomorrow, okay? Cheers, everyone.